Hey everybody. So the video you are about to watch was recorded before Congress passed the new COVID-19 relief package at the end of the year. So there have been some changes to those rules that will apply for the year 2021 and 2022, but those years only. So the video you're about to watch are the general rules, the way it usually works. However, for 2021 and 2022, business meals, as long as that is exactly what they are, one, they are exclusively for business, and two, you have purchased them from a restaurant, will be 100% tax deductible for, again, the years 2021 and 2022. So just keep that in mind as you're watching this video, and also make sure that doesn't mean that it doesn't still complicate matters a little bit. So be communicating with your tax preparers to make sure that you're tracking these things in the best possible way available. All right, everybody, here we go. Welcome to week 6 of tax season, everybody. Today we're going to be talking about meals and entertainment. Now, I did a video on this a few months ago, but it's such an area that is convoluted and confusing. There's just nothing cut and dry about it that I thought it's not going to hurt to do another video. I'm going to summarize kind of some of the information that I went through in the last video, and then I'm going to talk about a couple of what-if questions I often receive when I'm working with clients. So the first thing I want to talk about is entertainment. Right off the top, we're going to call that non-deductible. So if you are paying for a round of golf with somebody, or you purchased baseball tickets or some sort of season tickets, football, whatever, if it's anything outside of a meal and more like a gift, that's going to be non-deductible. Now, I did mention gifts, and I'm going to talk about that in a later video, but they don't even qualify as gifts. So that's something you want to keep in mind. Those are non-deductible entertainment expenses. Now, with meals, you have generally 3 categories of meals, and that is non-deductible, 50% deductible, and 100% deductible. Now, there are meals that are legitimate business expenses that aren't deductible on your tax return, but you can show them on your profit and loss. An example of that would be, especially in the contracting industry, when you are purchasing meals for your employees on a regular basis in order to keep things more efficient. It happens a lot in the contracting industry because you've got these guys on site and you don't want them to leave because it can create extra time and make it harder for you to finish either on time or early. And we all know that for profit reasons, that's very, very important. So in those cases, most people are okay with taking that hit as a non-deductible meal because in the end, it increases their profit margin. Now, one way in order to make that a tax deductible situation is to turn it into employee benefits, but then the employees are getting taxed on it and it just becomes a mess. So most people don't even want to go that route. So just something to keep in mind is that there is another option there, but I generally don't recommend it. Another area in which we see a lot of meals being purchased that are not deductible are owners' meals. It happens a lot. Owners feel like they're buying these meals specifically because of the business, because they're running around like their heads are cut off, trying to do what they can, and whatever they can have a minute to grab a bite and shove it in, that's a business expense. Well, in this case, not only is it not considered a business expense, but a draw, it certainly isn't tax deductible in any way. So 2 of the primary examples of non-deductible expenses I see. Now, for 50% deductible, there are 3 major categories that we see there. I mean, there's a lot that can go in there, but the 3 that I primarily see are 1, travel meals. Travel meals, I know a lot of people believe those are 100% tax deductible. They are not. They are only 50% tax deductible. Business meals, marketing meals, meals where you're sitting down trying to sell your services or products, or you're working with a business associate. Those meals are 50% tax deductible. And then another one is called the de minimis rule. So this actually used to be 100% tax deductible option. However, it is now, as of 2018, only 50%. And what the de minimis rule says is, and I'll just use an example, I have an employee and we have a major deadline coming up, and I need that employee to put extra hours in order to meet the deadline. And one of the ways I do that is I bring them their lunch, I bring them their dinner so that they don't have to leave and go get those things themselves. It's not something that happens very often. It happens rarely. It's called the de minimis rule and can be put into the 50% deductible category. Now, for the 100% tax deductible category, we just had a whole bunch of examples like that during the holidays. Companies throwing holiday parties for their employees, everything associated with that holiday party is 100% tax deductible to include the meals. And so that's how we generally look at those. Of course, there's a lot more to it. So hopefully you have somebody that you can call. And if not, give us a call here over at Pixel, and we can help you work your way through what meal fits into what category there. Now, a couple of what ifs that I receive. So I receive this question a lot, where you have two spouses who are co-owners, partners of a business. And one night they decide to go out and have a meal and then charge it off as a business expense. I generally just avoid that situation altogether, because the few times I've seen it come up in audits, it has not gone well. Primarily because the IRS is like, well, you guys are together all the time. You can talk about business all the time. So why did you have to go to a meal to talk about business when really we know this was a date? This was you guys enjoying an evening out together. It generally doesn't go over well. So we avoid that situation altogether. And kind of concurrently with that, you'll have these retreats, which, are kind of meals and entertainment, kind of travel, where a company will send their employees somewhere where they're all just kind of as a team working together, doing team building, planning for the upcoming year, whatever. Those retreats can be tax deductible, unless, of course, you are spouses and you're going out and doing that. The IRS doesn't really like that so much either. They're thinking that you're just using the business as an excuse to go have a vacation on the business's dime. So it may be a legitimate business expense, it may not, but either way, it is not a tax deductible expense that I would feel comfortable using. Now, that doesn't mean people don't do it. I just don't happen to do it in this office, because my job is to try and make you as safe as possible. So those are the two major what ifs that I tend to receive. Another one I receive is, okay, we're going to a business meal. The business meal is actually tax deductible, right? Because I'm there as an owner of the business, and my colleague is there because we're going to talk about business matters. But what if you each bring your spouses? It's a dinner, it's great. What then? Well, only half of that is going to be tax deductible. The meals of the spouses who are really not involved in the business will not be considered a tax deductible meal, while the two business associates meals will be considered tax deductible. And then here's another one I receive a lot. Well, me and my buddy went out to eat, and we both own businesses, and we spent 5 minutes talking about business. We just turned it into a tax deductible meal. No, the IRS is all about intent, which can be very hard to prove sometimes, but they can also see patterns. So if they know that these two are friends, and then they see all these meals happening, it can happen. Believe it or not, it's amazing at how good internal revenue officers are at sniffing this stuff out. So in that case, I understand you probably talked about business for 5 minutes, but was the intent really business, or was the intent to go out and have a lunch with your friend, which is perfectly fine. It's just not a tax deductible business expense. So there we go. Please, this is an area where there are lots of questions. If you don't have someone to go to, ask me. I would love to see what your additional questions on this are, because I kind of feel like we could do another video on meals and entertainments, what if questions alone. So feel free, post those questions, reach out to us. My contact information is always at the end of these slides. All right, so here we are going into week 7. Next week, I'm going to be talking about mileage. This can be a very important deduction for some people, but we really have to be careful about how we track it and how we take that mileage. So mileage next week, everybody. See you then. Take care.